Okay, hello everyone. We may start. So I would like firstly to introduce you to, let's say, us and to explain why we are here. So today we actually have Kimberly. She's coming from the DC and she's actually our accountant from the US, a really skillful crypto accountant. And Sandra is a colleague of mine. We are working for the past like 2 years. Dealing with finance, tax, and legal stuff in DeFi and crypto in general. And myself, my name is Aleksandar, and I'm also having background in finance, tax, and legal. And I entered the DeFi and blockchain space maybe like 2.5 years ago. So yeah, let's say the topic today is actually to give you a practical directions of having a DeFi in the US. And to having an entity there and how to operate, especially if you are in a crypto space, because it's quite specific. So maybe I'll start with our journey, and then you'll understand why we brought Kim from the US to actually give you some instructions, because we saw a lot of people making a lot of mistakes in practice. So you don't want to repeat our mistakes, and you want to learn them. So yeah, pretty much our journey started when we actually developed a DeFi saver, which is a DeFi tool. And I think we all had the opportunity to learn about DeFi saver, so I won't go into any specifics. But nevertheless, going into that formal legal tax and accounting stuff, the question was, okay, can we actually operate DeFi saver from Serbia? And the answer was no. Because we had like a legislation in digital assets, but they explicitly said you cannot do B2C transactions, which was crazy, So what we did is actually we did what everyone else did. We went to the US. So it's usually what do people do. Like you either go to the US or you go to the UK. That's like a standard procedure. And we said, okay, let's go to the US. We can establish a Delaware C Corp. That's easy to do, and that's pretty much it. We can do our business, so no one will ask us anything. That was the first mistake. Anyways, like we got lawyers, they established the C Corp, we got the accountants, we got the CPAs, so pretty much like tax consultants. And at that beginning, you really don't know whether they're telling the truth, because everything they say sounds really good. So pretty much like if you're going to pay some cash to your entity where all the development is, they say, yeah, you can transfer cash. Like, what about the amounts? But you can transfer whatever you want, like any amount you want. And they didn't hear about the transfer pricing. And transfer pricing is like a really difficult topic. And like you have to act on the market like you're on the market. It's not just sending money, whatever you want. So nevertheless, like maybe 2.5 years ago, and I joined DeFi Saver in the center team. And then we started our story, and then we fired all of them. So pretty much I actually talked to our CEO, and like, these guys don't know what they're doing. Let's fire them. Let's find someone else. So that was the first iteration. Second iteration was also like that. So we found another ones, and we tried to, build on the top of that, try to introduce them into our business. They failed. We fired them. So the good thing was, like after a couple of iterations, especially with the accountants, we found Kim. She was working at one accounting firm. And we were like, okay, Kim knows what she's doing. Like, finally, you can find someone who understands the ecosystem, someone that understands DeFi, blockchain, all the accounting specifics behind that, and also understand the taxes. So she actually introduced us to her friends, colleagues who are the CPAs, who are even nowadays doing our taxes. And regarding the lawyers, we didn't have much of the luck there. And then I was actually, as all of us, I'm on Twitter, and I saw one guy who is posting some really smart things. I'm like, okay, I'll contact this guy and see whether he can be our lawyer. He's like, yeah, sure. So nowadays we are actually working with him. But this is like, I narrowed everything down. This is like 3 to 4 years process, right? So pretty much like we ended up with a really good advisors, but it was a really, really, really long process. So pretty much, as I said, now we brought Kim so she can actually explain to you how we should have done it from the very beginning. And pretty much also we are going to talk about different accounting softwares, because I believe nowadays the accountants, like fresh accountants in blockchain, are actually doing everything manually, which is really hard because some of the solutions, some of the tools have like 1,000 or million transactions day by day. Just imagine like one guy would need to book that like over a couple of months. So pretty much there are like a lot of accounting tools you can use to record your crypto transactions, and this is actually what is used by the accountants, and this eases the process a lot. So we have slides. This is a fireside chat, so mixed everything a bit. Why we have slides? Because we don't want to miss anything what we want to tell you. And pretty much we're probably going to talk about 45 minutes. We lock the doors, so pretty much you cannot go out. And maybe a question before we start, like how many of you are actually accountants here? I know one. Please raise your hand. Oh yeah, I know two actually. Yeah, this is what I expected. So pretty much like this is, we knew that most of you won't be skillful in accounting, so we'll try to explain things on on the most easiest way, so you can actually understand what were the issues, and if you are going to establish the entity somewhere, abroad or in some other country where you're not familiar with your legislation, you'll draw your attention on things you should be aware of. And also we'll have something for the accountants, because there are a lot of specifics in accounting which will be familiar to you. If you're trading crypto, these are the things you need to know. So I'll start with the questions. You can see the topics we are going to cover. I'm not going to list them all. I think you can read them. But I think we can start with the first topic. And the first topic is actually, Kim, why we are paying you and what do you do as our accountant? Like I think all of us want to know why the accountants are like charging us fees so much, and why do accountants don't know everything and don't solve all our problems, and why do we need CPAs and lawyers and tax consultants, etc., etc. So maybe we can start with that.
That's a really lengthy explanation. But yes, hi. My name is Kimberly Rowland, and I'll just go in a little bit more detail. My background, I've spent the last 20 years in public accounting, the last 5 in the Web3 DeFi space. I've had my hands in too many clients to count, almost 100. But so I've been around the block, seen a few things, a lot of layer ones, arbitrage, gaming, lending protocols, as well as some DJs performing in the metaverse. So these are super fun accounting times. And I think the biggest issue that I've seen is overall, it's this big accounting disconnect. It's the disconnection between attorneys and accountants and tech. The engineers, I don't know why I make them so angry, but so I'm excited that you're all in the audience, and I hope that we can move forward and fix a few things. So some of the things leading the way on this disconnection is a lack of guidance, which we're not going to fix today. Also, the protocols, what you're doing, your actual businesses and what they are doing and performing are running ahead of everything we know as accountants. They're running ahead of our platforms, the software, the ability for the software to capture what you're doing. And then you're also not sharing with me what you're doing. So that's an issue. But I think what we can fix today is that the different departments, we need to start communicating more effectively together. But also, we have different perspectives, if that makes sense. And I'm going to show you a couple of these perspectives. I hope no one's actually in the audience that are with these clients that we're about to go through. But I was assisting a #1 NFT marketplace. We'll just call them that. And I asked them, how many wallets do you have? And the CEO told me he had 10-ish. And on the call was also the CTO, who said, well, maybe 20. And in reality, they had 248. So from an accounting perspective, here I am applying these wallets. And if I only had 20 or only accumulated 20, if you only gave me 20 addresses, well, everything coming in is going to be revenue, right? And then I propose that to them, and they'll say, oh, that's an internal transfer. What are you doing? Well, you didn't give me the other wallet, if that makes sense. So then I said, all right, guys, how many transactions do you have? this is even worse. The founder said 10-ish a month. The CTO said maybe 100 a month. And then, sure enough, we launched those API connections in the software platform. There were 1 million a day. And it crashed the entire platform, not just for my team, but for every user of the software. The vendor called me and said, okay, we got to cut you off. I'm sorry. And I upset them quite a bit because they were down. And, lesson learned. Look on chain. It doesn't matter what your clients think or what everybody's saying you have. Look on chain, see what's connected, see the number of transactions. Now, you run into the problem too. Oh, going on. Layer ones. Okay, I have a layer one that I had a meeting with, and I said, how many wallets do you have? The CFO said that they only had 27. The CTO said 110. In reality, they had 800. Where's this disconnection? I didn't ask them what's their favorite wallet. What wallet has the most important transactions to you? Like, I need all the data. So there's this odd communication breakage between our teams, like just within the business. Transactions for this layer one. This was fun.
Yeah, this was fun.
How many? CFO, 2,000 total from 2018 through today. CTO, 25,000 a year. There were 4 billion. That's a lot. I went into a little closet. I cried a little bit. I came out and said, okay, how do we tackle this? 4 billion, that's something. So that's where I realized we need to circle the wagons. We need to bring our teams in together, and we need to have some real hardcore conversations. Does that make?
Yeah. Yeah. So maybe to add on, like if you are a CFO, you would expect from a CFO to know the revenues of the company. He is actually paid to know that. And if the CFO comes and says, like, I have 2,000 transactions I'm worrying about, and he has like a 4 billion, you should fire him. So that's it. Like, you don't need to think about that. And yes, like this can be like a real issue. And now what I said from the beginning, like imagine you have 4 billion transactions and you need to record that manually. Like you cannot do that. Like physically you cannot do that. And this is why like later on we're going to speak about different tools that you can use to record all of this in your books, because if you don't have some sort of like internal tool or something like that, you're going to die. Like literally, like you cannot obtain that. And if the tax authorities, whether this is IRS or someone comes after you, how are you going to explain this? Like, okay, yeah, I have like 2,000 transactions and that's pretty much it. And that's not the truth. So yes, and nevertheless, like these are like just some examples from the practice we were talking about, and there are like a lot of different items also to consider, because we all know that blockchain DeFi space are like much more complicated than this. We are just talking here about, I don't know, exchange for fiat or exchange for different tokens. But imagine like going into the staking or lending protocol, something like that. It gets more scary. So we'll talk a bit more about that. So let me just see. Yeah, this is actually what we want to cover as well, because this is also something that is important for your financial side. This is what is important for the accounting. And I believe like we have like 6 topics here, and the first one, like it was the favorite one, like the one we firstly discuss is like just wrapping of tokens and how do you deal with that. So
Sure.
Kim, maybe
Yes.
you can explain what we discussed.
Absolutely.
Yeah.
I have to say, I just want everybody to get together in a room. I know accountants, you don't want to talk to us. I know it. We know it. We feel it. We're introverts, but bring us out of our shell, and just attorneys, your tax accountant, your financial accountant, bring in a couple engineers. Everyone needs to get together in a room and document some of your key positions, such as topic number 1, wrapping. This is a big deal. How are you going to treat it? You think, some folks think it's 2 different tokens. That is what an accountant would think. You have to decide as a company, is it better for you to treat those as a capital gain or loss event, which triggers a tax result, or are you going to treat ETH and wrapped ETH as one and the same. That's something you need to document. It could cause huge capital gains for you, just determining the timing. So everyone needs to get together. You need to write up a documentation with your attorneys and say, this is how we're going to treat this event. It also helps your accountants to know how to record the transactions.
Yes, it's like really interesting topic because that's, from my perspective, it's like the same token. It just has the same value, but you're just actually wrapping it so you can do some other stuff. But when someone from the tax authorities or someone which is not that knowledgeable comes, he'll say, yeah, but this is wrapped ETH, it's not ETH. So pretty much he'll say, okay, this is a taxable transaction. So what we were actually talking about is that, okay, so we have ETH in some different form, and whether this should or should not be a taxable transaction. And when I'm saying taxable transaction is that if you acquire that ETH at the value of $1,000 and you're wrapping it when it's like 3,800 like now, then that difference of 2,800 might be a capital gain if you're treating this as a sale, right, as an exchange. So how we observed it, we tried to go to TradFi, like traditional finances, and find something similar to this. So we say, okay, if you wanna, do something with cash or send it abroad, it has to be converted into like digital versions. You put it in a bank, it's now digital. You use your application and send it abroad or pay something. And pretty much you're doing similar thing with ETH here. So this is our argument, and we said, okay, we are not going to treat this as a taxable event because we just need to wrap it. We just need to do that in order to, execute the transactions that do our business. But pretty much for us, it's not a taxable transaction, and pretty much you can actually manipulate your capital gains and losses by wrapping and unwrapping it. So yeah, this is actually the stance we took after internal discussion and discussion with Kimberly. And this is maybe just one of the topics you need to consider if you are having an on-chain business and actively trading with tokens. So yeah, and then we
Not an exhausted list.
Yeah,
Just
yeah.
some of our key topics that we thought we could get through. But we have hundreds, so please feel free to ask us all 100 afterwards.
We'll be here today and tomorrow, so feel free to approach.
Next, we have inventory.
Yes.
So typically left only to accountants, but you do need to get everybody in a room together and talk about this. And by inventory, accountants are looking at digital assets like their inventory. I think I'm still on.
Yeah.
Yes, sorry. So we've got, decide if FIFO is best for your company. Highest in, first out would be really aggressive. Everyone is usually falling on a conservative position of taking first in, first out. Or spec ID, completely acceptable and arguable. I have been through an IRS audit with a client who did use spec ID, and they didn't bat an eye after we explained to them what it was. But yes, they were okay with it.
Yeah, maybe we can just explain what all of this means, like because we have two accountants.
Oh, true.
Yeah, maybe we can ask the accountants. Do you know what HIFO is? Yes, that's correct.
But I think that missing one like LIFO.
FIFO,
Yeah.
Yeah, we
last
kicked
in,
it.
first out, we did kick it just because it's a no-no. It's just a red flag for almost every regulatory agency at this point. So we didn't want to
Yeah.
advertise. That's an option.
Yeah, international accounting standards ban it, so we didn't put it on a presentation. But yeah, as Milos said, like FIFO is just when you have your trading crypto and like which ETH are you going to sell, because you need to report that for tax purposes. So pretty much like if you have thousands or billions of transactions, it's really hard to do this spec ID. So I think spec ID is actually you just choose the ETH you want to sell.
exactly.
Yeah.
Yes,
So
in theory.
that's hard to
That's-
do. So pretty much you take the first in is the first out. And like if you earn fees for like a month and then you're selling something in the second month, the first ETH that came in or some other token, you're selling it. So that's the rule. You set that rule and the accounting software does it like that. HIFO is like really, really aggressive
It's
approach.
aggressive.
Yeah.
So you would basically tell the software, I want the highest ETH value basis that I have, and I want to sell that one. Almost to create a loss no matter what. Just depending on when you purchased it.
It's good for your taxes, but it's really, really aggressive.
It is aggressive. Now, Spec ID, though, is an option if you're using a software platform that can perform that. And then we're going to talk about that a little bit later. But a Spec ID allows you to choose and decide what's best for your company. Do you want to, it can actually, the software can lot pick it. It will assign every transaction that comes in, every single token that you have, it will assign a lot ID number. So then it will then allow the system to say, okay, if my plan is I want to have the least taxable amount of revenue possible. So you would probably take the approach of saying, okay, well, I want the software to go ahead and pick from that lot ID, which is IRS approved. That's acceptable.
Really?
You can, yes, I've been through an audit. Because the software places a lot identification number on every item, you can prove that it did its job. So they're okay with that. But you can say, I want to pick the token to sell that has the greatest short-term loss or long-term loss first, and then go in and choose long-term gains, and then short-term gains would be your.
So pretty much software does it all, or the most of it. So that's why the softwares are important. Like if you do it manually, that's not recommended. Like you just can't do it. You don't have time to do it.
No, and it would be hard going through an audit to prove that what you did. You'd have to really be good. You'd have to be Sandra. Really, you would have to be. We'll move on to her favorite topic.
Yeah, that's.
I
I
feel
believe.
bad you haven't heard from her yet. She is so smart. It's crazy. She keeps me on my game. So
We all work together
true.
to do our
They're
best.
too nice. They're too nice. They're my favorite. They really are.
Yes, we are.
But maybe we can touch upon this topic, speaking of the capital gains and how the system is set up to do what it's supposed to do based on what we pre-agreed, whether these or those transactions are going to be considered taxable and trigger capital gains or losses or not. So you would assume the way how you said it, communicated it, it's working the way it should be working, and that's it. You don't have to think about it. But like with anything else, things can happen. There can be some hiccups in the software, and you definitely have to kind of check after it to ensure that the data that you have inside is complete and accurate. And we will get to that in more detail in a bit. But speaking of the capital gains specifically, as it is a big thing on which you have to pay taxes. And so maybe just one recommendation as to how you can check, because like when you pull out the report from the system or like from the crypto accounting software, you can see capital gains for each crypto token that you're holding in your portfolio, right? And so it gives you some total number. And so if you do not have what to compare it against, you cannot really be sure whether it's accurate or not, whether it's too much or it's too little. But what you can do, if you have an internal tax tool like we do at the DeFi Saver, it's a great thing, and we will talk about it in a bit as well. But if you don't have it to compare it against, the best thing to do is just to export that capital gains report where you can see the gains on each transaction, sorted highest to lowest, and then just look up those few transactions in Etherscan on chain and check it out and see whether the things are making sense. So recently we had a problem where the system was incorrectly recognizing an intercompany transaction. So it was a transfer between wallets of our company. So it's intercompany, shouldn't be taxable, shouldn't create any capital gains or losses, but it was not doing its thing the way it should be. Therefore, our capital gains, the total was showing in the double amount of as compared to what it should be. So if we were not to catch that and look for that, we would at that point be paying much more taxes than we should, which is from the perspective of paying taxes in the tax authorities, always better to pay them more than less. They would not complain. But from the perspective of cash flow, it's like you want to pay what you should be paying at a point and not giving out the money in advance. So that's, yeah.
Like don't trust the software, at least at this very point. Like these softwares are still developing. Like this market and accounting softwares in crypto are still in early stage, I would say. And we actually tested like two softwares, I believe. Like one is Bitwave, and we are still working with Bitwave. and the other one was Cryptio. And although Cryptio was like a better from the development perspective, and we had like much of the expectation from it, we just couldn't fit our business into Cryptio. They just couldn't support everything we needed, so we dropped it and we continued working with Bitwave. And what you heard here, like Bitwave also had its hiccups, but you just need to control it. Like, you know, they'll do what they do. They'll do the update, like they did the update last time, and like you cannot get your capital gains report or something like that. And it gets frustrating because, I don't know, every quarter you need to pay taxes, you need that data. But the thing is, like, and what we actually did, what the company we are working with did, the company actually brought us. Like, they recognized that they need some guys to, you know, look at this and actually follow what the software is doing, follow what the accountant is doing, and actually work with them so you don't actually overpay taxes, which is bad for you, or pay less taxes, which is bad for the IRS, and it's bad for you. So, yeah.
Well, also why engineers need to get together with the accountants so we can have something to reconcile to. Yes. So reconciliation, another favorite topic of Sandra.
Of mine,
Yes.
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 That's what I do all the time, and that's yes. So in terms of that, I think the best way to look at it at a high level, as if comparing to the traditional business and like what you need to provide and how do you ensure that everything that's inside of the books is like complete as a first point. You provide all the bank accounts, all the transactions, the accountants book it, and then they check whether the end balance for the bank accounts matches against the bank statements at a specified date. And if it does, then you have that certainty and assurance that all the transactions that went through those bank accounts are in there. So that's the first step. There are many other questions that you're asking yourself when assessing whether the things are complete and accurate, but this is the first step. The same translates to the blockchain and the wallets. So you need to ensure that all the wallets where your business is taking place through, like wherever that you have your funds in from before today, like that all is captured within the crypto accounting software, that it's all connected and it's feeding the data in. So that is the first step. If you operate your business not only on Ethereum blockchain, but also you developed L2s like Arbitrum, Optimism, all that needs to be connected as well. All the data needs to be in also. So just like thinking from that broad perspective, like where you have your transactions, and like it all needs to be part of the crypto accounting software, needs to be reported. And so this also brings me to this point, like as the business is going, some new things are appearing that you're unfamiliar with, but you recognize there is something new. It's always good to discuss that with the technical people and understand it better, and also discuss it with the accountant so you can set it right from the start in the system, like how you will treat it, how you will observe it, and also document your position so that once some time passes, you know why you decided to do things in a certain way, like what was your argumentation. So that is one. And then in terms of the accuracy, it's like, this was definitely my question in the beginning, like, okay, blockchain, I see all these transactions flowing through the wallets, revenues, expenses, and then it all aggregates and I can see, I can pull out a report at the end of the reporting period and see the balances or like the quantities of each of the tokens that we have in our portfolio. And I see them. But like, how do I ensure those quantities are correct? How do I know that's right? But then what the source of truth there should be is the blockchain, is the wallet balances. So you can pull that information directly from the blockchain and compare it against what you see in the crypto accounting software to ensure it's all good. So once you do that as a first step, you identify usually some differences, and then you just start thinking why could it be? So for example, you have staked ETH as a staking token, which where you're earning rewards, and by earning those rewards, the quantity of that token is increasing every day. Those rewards are being allocated to your wallet daily. So the quantity is increasing without those transactions being pulled into the system. So there is a discrepancy there. So just then recognize, okay, I have this token which has some specific feature that I need to observe additionally. So something like that. Or you have just like the system hiccups where some transactions for some reason are pulled in twice or just not categorized well, like multiple things that can be the cause of the differences, but then you kind of can narrow it down by making some strategy into how you're observing them.
Yeah, and you have a headache with all that. Like,
Yes.
Definitely.
We had to have
All of us, yeah.
our engineers that actually worked at the software that we're using develop us a tool. Now, what we probably should have done was bring in some of your engineers to validate that tool. That we haven't done, just to create you guys some more work. But yes, on the reconciliation, there is also what I would ask you is determine how much of a purist you are. How much, I'm not going to say how much do you care, because everyone cares, but I had a client that, an arbitrage guy, had millions and millions of transactions every year. I was doing 5 years for him with over 300 wallets. And I did it all, and at the end of the day, I got down, I could not figure out why was I 1.5 ETH off. It was rocking my world. And I finally had to admit it to him, look, I'm 1.5 off, but I'm going to go back. I'm going to figure it out. And he was like, no. I am not going to pay you $10,000 to go after. It was only like $1,500 at the time. Stop it. I'm not a purist. Move on with your life. Anything under 5 ETH. So you have to determine where you're at. Now, this one over here likes 0.0000006 ETH. So document that with your team, see who, agree with everyone and write that down. Maybe even have people sign off on that. Put some barriers up for your accountant because we'll chase everything.
Totally agreed.
Yeah, and we also have some topics about marketing NFTs and investors and vendors, employees. So
sure. Yes.
Yeah.
Okay. Marketing NFTs. A lot of protocols out there decide, we're going to mint 10. Last week I saw 10 million, I think, NFTs minted just to be distributed for marketing purposes. Again, your accountant's going to want to track that. It's zero. It costs zero. There's no value in those. You need a document for your accountant. Stop it. Don't chase them. Record the gas fees. Move on with your life, because we'll spend hundreds and hundreds of hours tracking those zero basis tokens for you, thinking that you want to know at the end of the day everything, and you don't. So just don't let that be known. Tell your accountant, write it down in a format for them. Also, inevitably, you're going to have folks lose their wallets. And you're going to be paying vendors who lost their wallet, or investors, or even employees. If you're paying employees in crypto, they're going to lose their wallets. So make sure everybody needs to get together. This is definitely with your attorney, and say, what are we going to do in this case? For each event, it's going to happen. And if you don't have that written down, you don't have that contract signed with that vendor or with that employee, you're going to pay them double.
Yeah, these things are crazy because you need to document everything, and like in accounting and in finance and in tax and legal, you need to document everything. When the tax authorities come and auditor comes, they'll ask you for documentation. And this is like the cumbersome part of doing all the businesses. It is not just blockchain business, it's all of the businesses. And this is why this part of the business is also important, because you can do your business and have a great product, but you don't want the IRS or the auditor or someone else to come to you and say, okay, you're doing this wrongfully, you're going to have penalties, or even like some sort of a criminal responsibility or something like that. So this is why we were talking about this, just to draw your attention on the most important things you have to consider while you're doing business, because this is part of the business, and this is like business costs you have to take into consideration while doing business. Always like boring as hell, at least this documenting part. Yeah, moving forward, I believe we wanted to speak a bit about the regulation. This is actually my part. Yeah, I like speaking about this.
We're going to watch him get a little cranky.
Yeah, being mad. But yeah, nevertheless, like I think you're all following what's happening in the US, and pretty much like there's like a lot of lawsuits against like mostly like Texas, but also some of the decentralized protocols, most famous being Tornado Cash, right? And this is like even popular now. But what I want to say, like, if someone would ask me to do some comparison all around the world and say, okay, where is the best place to open a company, do some crypto business, something like that, like I would firstly say, like, US is a big no-no. Why no-no? There's like a couple of things you need to consider which will be enacted or enacted in the US at this very moment. So the first thing is that from the next year, you'll need to do KYC on every user you're having. Like if you're considered a broker, and pretty much everyone is a broker, even they say like Uniswap is a broker, they'll need to do a KYC and report that to the IRS. That's crazy. Like they will not going to do that, I believe so. So there's still a fight against this rule, and I believe they use generative AI to write the comments to the IRS on this, and it's crazy. Like I don't know, like 15,000 comments was written to the IRS. They probably didn't read it, everything. They might even use AI to read all of that, to sum that up. Hopefully they did. Yeah, hopefully. Yeah, but that rule is really crazy, and you don't want that into your business. We are speaking about decentralized finances here. We are speaking about the blockchain and ZK proofs and everything that should protect your privacy. And then on the other hand, you have a regulator saying, oh, you need to report all of this. And like they issued a form on 4 to 5 pages where you need to populate all the data of the users. That's crazy. And then the other rule that was already enacted, but we are waiting for the IRS to bring the legislation in it, is like all the transactions about $10,000, you need to report it to the IRS. And like you need to do that. You'll probably need to do that like in a month or so. And what's behind that? They are considering crypto as cash. Like in Serbia, I believe in every other country, if you're doing transactions over 10,000 euros, $10,000, you need to do it through the bank. Why? So the government can see it. So they were thinking about, okay, what we're going to do with crypto. So they say, okay, crypto is cash. They literally incorporate it into the definition of cash, crypto, and saying you need to report every transaction you're having with your customer over $10,000 to the IRS. So that's another KYC that is imposed, and it's already enacted. So you're just waiting for the, let's say, details, so you can actually roll that out and apply it. Also, what is really bad thing, I'm sorry, Kim.
No, I know where you're going.
Yeah, what is a bad thing about the US, and it's the tax regulation. So pretty much like lots of companies go to the US, but the development is somewhere else. Like, is it in Serbia, Croatia, somewhere on the Balkans, or somewhere in Europe? Like most of the people who are developing blockchain softwares are like here in Europe. They want some entity that can roll that out, and it's either like UK, US. I'll speak about other jurisdictions soon, but nevertheless, you go to the US and you say, okay, I'll have the IP here and I'll have the development somewhere else. And you're doing the R&D, right? You're constantly upgrading your software because blockchain is upgrading so much. And all of these expenses related to development, like research and development, are recognized like in the amount which is 1/15 of the amount you're actually actually paying to your developers. So what happens in practice, like you earned $1 million and you paid $900,000 to your developer, and these $900,000 are not recognized for tax purposes. So
As an expense.
As an expense, yeah.
Fully,
So you're not
right.
having like $100,000 profit. You're having like 900,000 something dollars profit. You're paying 21% tax on that. This hits your cash flow really, really hard. And this is something no one is talking about. But when you actually
It's
go,
new in 2023.
Yeah.
This just hit us.
this really hits your cash flow. Like you cannot recognize those expenses. You can argue that some of these expenses are maintenance, but you need to document that. And imagine how much time you need to document that. Like everyone needs, like the CDO and all the people need to do, to populate timesheets, and they hate it. Like they really hate to do that. And even though you do so, it's like hard to explain to the tax authorities what is actually research and development in that story and what is the maintenance. So it's a question, how do you want to approach that? Or the question is whether you actually want to think about that or you want to move somewhere else. And that's for the US. So US is like a big no-no at the moment. And it's like it's a pity.
It was a panic moment for everyone in September, October. We had to run around like 2 days before the tax return. Not us, but there was another client that we ran around trying to collect every engineer we could speak to. Can you imagine accounting like going up? What? How much? Were you spending on developing new product? And they're like panic and looking at me in fear, like, why are you asking me that question? What did I do wrong? I'm like, no, we're just trying to save money on taxes. How much? And we're just freaking out. And they're like, well, let us get back to you on that, you crazy psycho. But they did. They came back to us, and I remember them deciding that like 12% was their magic number. The rest of the time they were spent maintaining the blockchain, patching, and security. But as far as new products go, they decided only 12%. So, but this had been, in business since 2018, and it had been a while. And to be conservative, we decided to go with 20%, but we documented every engineer and what they said, and 7, and whoever voted, it was like a vote, and we decided to take like an average, but 12% was our magic number, and to be conservative, we went up to 20. So it's a huge deal, and I'm so sorry.
Yeah, no worries. No worries. But yeah, nevertheless, and also the Europe is also introducing, Europe, for instance, in opposite to the US, is actually bringing the legislation. And you have MiCA, everyone's talking about MiCA. But MiCA is also restrictive, and it's also hard to implement because there is some legislation about stablecoins coming into force, next month. And we were just talking internally on, how this is going to be applied in Europe, It just, so many uncertainties here and so many development, and it's really, hitting the KYC side of DeFi and blockchain, but also the parts where, stable coins need to fulfill this and this condition, etc., etc. So, it's just the legislation is going to some place, and we actually need to, fight against that as much as we can. And the other countries as well, someone is, mentioning the Emirates. They have a crypto legislation. They have VARA, which is like a body for digital assets. They have sandbox regimes. You go there, you do whatever you want. They will not, impose legislation on you, which is great. But on the other side, I have a friend who worked there for 10 years, and he's the bureaucracy is crazy. And you would not expect that from the Emirates, which is flexible country and everything is allowed. So yeah, pretty much and you have those islands in the Pacific, which still have the regulation. Actually, they have most of them have crypto regulation, but it's flexible. So this is something also to consider. It's not an advice, but I'm just sharing what we were exploring, what we were thinking about that. And just seeing in which direction we're actually heading.
It's okay to have a plan B.
Yeah, it's always good to have a plan B, especially, and you need just to consider that depending on what your product is. So nevertheless, I'll stop here. I can go with this until tomorrow. But the other topic I believe we had is actually related to these accounting softwares, because there's a lot of them, and pretty much you should use them. Even if someone is doing a lot of trading, you can use it for personal purposes. But nevertheless, these are all business related. And I'll just leave Kim to, let's say, introduce you to some of the specifics you should consider. I believe you didn't
Yes.
name them.
I did not name them because I didn't want to get in trouble. I work with a lot of them. So I put my top, don't judge me, I put my top 4 sci-fi TV shows up there. So, but as their names. So anyways, so digital accounting software platforms. And when you go to address these, I do recommend to the 2 accountants in the room that you bring in an engineer, because they're going to know how your protocol is working and if that platform will assist you. And don't be scared, guys. You can. The accounting terms aren't bad. But some of the things you need to ask the software themselves when you meet them, there's more than 20 out there. But I honestly, there's a top 4 I have. You can ask me after. I'm not going to say on camera. But you want to first ask, does the platform itself connect to what your accountants are using ledger-wise? Are they using SAP, QuickBooks, Xero? There's a new one on the market called Puzzle that some folks are looking at. So make sure it connects. make sure if you're in and out of liquidity pools and staking that that also will be able to be automated. Beware, they all say yes, yes, it can be done. Technically, you can manually force the software to do it, but that doesn't save you a lot of time. So make sure that that's an item. Are NFTs a thing for you? That could be an issue as well. Some of them still don't bring in NFTs. They are really running behind the game. And if we have any very famous people in the audience, you have more than 10 million followers, please stop naming your wallets. I spend my nights in front of the TV from 8 to 10. I have to hide all the NFT spam that gets brought in. 3 to 5,000 a day are being dropped in famous people. Stop it. Stop naming them. Payables and AR. A lot of us are paying bills using crypto. Can that be applied via the software? That's a make or break for some of us. Sandra knows. She's like shaking her head. Yes, yes. What's on the roadmap? What's on your roadmap? So, some of us accountants usually run behind the game. At best, we're in the present, but are we in the future? Do we know where you're going?
Which chains?
Which chains you're on? I know that you recently joined a few more and added some more wallets. She's like, oh, I added some more wallets to the software. I was scared to look, and it wasn't bad. But yeah, so make sure that they're automated, the software themselves. And to be honest, there's this really big one that I'm not a fan of, but they are still only connected to Ethereum and pulling in Bitcoin. Otherwise, you're out. Pricing index, is that important to you? Sometimes yes. Sometimes it rocks people's world that they connect to Crypto Compare or CoinGecko or CoinMarketCap. Which pricing index is your preference? And that's a big deal because that's caused us some differences.
Exactly. And also with timing, with the when the price is fetched,
Yes.
there can be a delay of 45 minutes, 1 hour. Kim shared that there are some softwares were fetching prices with 1 day.
1 day. At the end of the
24
day.
hours of a delay, which is kind of
Yes,
unbelievable.
only by the day.
Yeah.
My number one choice, which we've already named them, but my number one, they fetch by the hour. So at least it's by the hour instead of by the day.
Exactly.
Yeah, so that's a thing. But support, for me, support is huge because all of these are broken. I think I even put a warning up there saying they will break on you. Every week it's something new because they're also building. They're trying to up their game or adding new amenities, attaching to new chains. So every week, it's once a week. But to be honest, we're still using the best one. So you just have to know what support you have. Is it live support? Can you get a person in person to Zoom you once a week? That's great. Otherwise, do they have a Slack channel? Do they have a bot? I don't do bots. If it's I need immediate reaction and I need to speak with someone. Most of the time, by the time I come to them, I actually have direct line to an engineer. I bypass sales. I bypass the support. I go direct to the engineer. It's usually an engineering issue once I find one. So I guess another little kind of a joke, but no, it's a real item I have that's kind of a personal note, I guess I would say, if you want to go to the next slide. Personal note, the vibe of the industry matters. There's one that people love to use. I find them to be overly funded, pompous clowns with a software product 2 years behind the other. That's legit. I can't work with them. I argue with them. I meet with them once a quarter, and I still just bump heads. We bump heads. So I'm like, I can't tell a client, you need to go onto that software. I would just bring their necks. So definitely make sure you just fit into the vibe as well.
Great. So
Here you can.
yeah, I believe we are at the very end. We have, it's a Q&A. So yeah, nevertheless, we have 10 minutes more, so we can answer your questions if you have any. Yeah, I see 2 hands. Yeah.
Sure.
Yeah.
You can take mine.
Yeah. Sandra and myself will share.
So you were first, right? Thanks. Two questions, if you allow me. First one relates to one of the first slides where I mentioned the L1 with 4 billion transactions. I just checked a few block explorers, and I realized that there are basically 3 networks that can be one of these. I won't name them, but yeah, the major ones.
Yes.
Is it really the case that the US government considers all the transactions on the L1 to be a taxable event, and you have to record
No,
all
no,
of
no,
them?
no. Not all transactions, but the issue that the L1s have is every transaction produces a gas fee or a transaction fee, right? So every one of those events does bring them in revenue. So that's a revenue line coming into my wallets.
But that's distributed among the stakers. It's not the network fee. The network fee goes to a bunch of anonymous stakers. No.
No, not for this one in
Not all
particular.
that. Okay. So that's
There's a
case.
percentage that goes to a staker, but there is that the whole point to an L1 and how they can fund themselves is through their revenue fees, the fee income that they're bringing in.
Okay.
Yes,
makes sense.
they give some staking revenue fees, and actually for this particular one, it's the foundation that gives the revenue, the staking revenue,
Right.
not the L1 themselves.
And the second one, unrelated to the first one, is that the guys from Missouri, you know Missouri, Missouri.
Missouri.
Yeah, Missouri. They are very bullish on changing the president this year, and they really hope that if that happens, everything changes to the better. Do you share these expectations generally?
No
Can we
political
turn
related
the
questions.
camera off?
At least
Yes, I do agree. I'll own that.
Thank you. Anyone else? Yep. Okay. I'll start from.
No, seriously, no political related questions.
Hi, just wondering what happened when you discovered 4 billion transactions?
I cried.
No personal questions.
Fair enough.
Okay. Here you go.
So one question for Kimberly. In USA, according to GAAP standards,
Yep.
cryptocurrencies that are received and converted into dollars within, say, in a minute or in a moment, so crypto didn't change value, that needs to be recorded as intangible asset and are subject to capital gain, or not, or those crypto assets are not recorded in the balance sheet.
Oh yes, no, I would definitely bring it in.
Okay.
I bring in everything.
There was someone here, I think. Yep. Can you please? Yes.
Thank you all. So my question was related to from taxing and accounting point of view. When a company receives a crypto, when do you calculate the price of that in US dollars? I mean, do you rely on some indexing app, or I mean, is it right when you receive the crypto, or like end of business day?
Well, I'm sorry. The question: when do I record it?
Yeah.
Yes. The moment. So it will come into my. Well, if I'm using the software ledger itself, it will come into the ledger at that exact time, and I categorize it to the appropriate accounting ledger account. So say it's some kind of revenue, a commission revenue, or even staking rewards. I would record that, and it would be recorded at that exact second. Now the pricing would be on the hour. So say it's 201 to 259, it would be the same price within that hour. So I'm going to take the basis at that moment. Typically, I work with a lot of clients that, if you're not in just one area, I like to use Crypto Compare because it pulls from all pricing indexes and averages them. Not all, I think there's 20. So they take 20 different pricing indexes and average them. And I just feel like that's safer because what if one goes down? You're still up and running, right? And you're taking global pricing, right? Because technically we're supposed to be decentralized. We're not supposed to know the person's in Arizona or in Croatia or wherever they're at. We're supposed to be I like that it's a global pricing. So I use that pricing. Does that?
Yeah. Okay. So I guess that IRS agents are knowledgeable about that, or
They are.
they
I
don't care.
actually, I have a public company that we report to the SEC as well as the IRS, and we had to do a whole write-up about Crypto Compare, and they accepted it.
Okay, because there might be like a project in crypto where all alternative days, that token of a crypto chain could be worth 0, and on other days it will be like $100. So if you receive it as a 0, then you don't have any gains, but actually you do one other day.
Well, you would accept the gain if it came in at 0. You would just take account for the gain when you sold it, or it leaves. So, according to what we're doing, the sneaky part and the thing that kind of hiccups accountants is when you pay a bill. Not only do you have to recognize that expense because you're paying my accounting invoice. So it's an accounting fee for you, but then you also have to recognize the capital gain of that token that you're paying me. So you'll recognize both.
Both. Okay, thank you.
You're welcome.
Hi, I was wondering if you could describe describe the importance of the differentiation between development and maintenance when dealing with overseas developers. I think there was that example of if you have 1 million in revenue and then 900K in expenses, that might not be counted. So what's the significance of this differentiation?
I know that's your
Well, you'll pay a lot of taxes. That's like in a nutshell. If you want me to, let's say, sum it up, the thing is like you need to choose a jurisdiction which is preferable from the tax perspective. Like last year, IRS said we are not recognizing overseas R&D expenses. So even though you earned $1 million and spent $1 million, $1 million in expenses will not be recognized, right? So you have $1 million of revenue, you have $1 million of expenses, your profit is 0, right? You don't have anything. Like you don't even have cash on your account or have any crypto on your wallets. But the IRS says, I'm not recognizing out of that $1 million of expenses, I would not recognize like $500,000 or 900,000, right? So you'll pay 21% on that amount because this is not recognized for tax purposes. Taxes are specific because it's not like you have $1 million of revenue, $1 million of expenses, your profit is 0, you don't pay taxes. In like tax regimes, you have something that is called non-deductible expenses. So if they say these foreign R&D expenses are not recognized for tax purposes, your financials looks like $1 million of revenue and $500,000 or 900,000 expense, profit 100,000, right? And you pay 21% on that. So that's the crazy part, and this is why, like US, from the perspective of having an IP there and the development elsewhere, it's not a beneficial jurisdiction to be.
So in that scenario, could someone just have a DOO here or Montenegro or wherever, and then that's how they're paying out these developers, and then on the taxes have this reported as a separate firm that you're doing business with in this scenario?
I actually can answer that. I've seen it. So it didn't work. So not that we got caught, but it was the tax CPA who questioned it. It was actually on, because it's our largest expense, right? Or it was for this one particular client, it was their largest expense out was the engineering and tech fees, right? And they said, how much of that is R&D? And we were like, none, what? And that's where we panicked. But we were paying a business because that's where all the engineers and the techs they were held there. They weren't working for my company. They were held elsewhere in a different entity altogether. Mm-hmm. But we still put it to engineering fees. So at the end of the day, we did have to take a percentage.
Yeah, it's just.
But and I think what we didn't mention when we were talking about that is that you have to take the newly. So we did say it's new newly created items only. Like it doesn't exist yet. So you're creating this new item, this new product, and you get to expense 1/15 of it each year. So it's over a 15-year period. Instead of taking that whole expense